Joining us now is Alexander Scanlon. He's the founder, CEO, and managing director of Barton Gold. And Alexander, you're on site today. How are you, sir?
Doing well. Thank you, Mark.
Very good. Now, you call yourself a pure play explorer, developer, and you're purely in South Australia, very focused there. And your ambition is to be the largest independent producer in the area in about 5 years' time. So, can you give us a brief overview of the strategy?
Yeah, that's correct. So what's really interesting about South Australia is that it holds about 25% of Australia's known gold resources, but only represents about 2.5% of annual production. So it's actually an industry that's been very underdeveloped in the state. And where we are, we're right in the center of the Gawler Craton. So this is a globally recognized geological domain, covers about half of the state of South Australia. And in the middle of that domain, there is a recognized historical gold province that has produced a lot of gold over the last 130 years. We have come and essentially consolidated that district. We own the most resources in the area. We own the only gold mill in the area. And the plan is to actually build a second new gold mill. We use our existing mill to leverage operations in the first place, build the second new mill, grow development up to 150,000 ounces per annum, and that would make us the state's largest independent gold producer. The plan is to do that in about 5 years' time, and we can bring forward that stage one production to sort of 2 years' time from now, and take a nice lower risk transition into operations and development.
Now, Alexander, you're currently drilling at Tunkillia, that project, and you just put out some assay results just within the last 24 hours or so. You're discovering new zones at depth. You are very excited about the possibility of expanding the resource. So give us some highlights of your news release recently.
Yeah, thanks. What's really interesting about Tunkillia is that this is a project we acquired in 2019, and when we acquired it, it had a 558,000 ounce resource. So we grew that resource before completing our IPO, and that was in June 2021. We grew the resource in October 2020 to its current 965,000 ounce resource estimate. But the vast majority of the historical drilling that informs that resource calculation was completed before 2008, and really before 2005. And so between discovery in 1996 and that period of time in 2005, about 90% of the work that informs the current resource actually was done at a gold price of below $500 US. So we're obviously in a very different gold price environment now. And what we're looking at are a number of strike and depth extensions in areas that were untested or poorly tested simply because there was sort of a limited search domain because of the low gold price. So we have found a number of high grade intercepts that seem to strengthen our theories around higher grade zones in the resource within the existing block model, but also potentially extend the block model on known mineralization down further. And finally, below the current footwall of the modeled resource, we've intercepted sort of 20-meter thick zones of mineralization in previously untested areas. And that's pretty exciting because it gives a lot of additional support to the idea that there's a lot left, not only in this deposit, but for repeats of this deposit in the immediate vicinity.
Right now, investors can expect more drilling results over the next few months, a steady flow of news as you lead up to a mineral resource update in March. Are there any rough numbers you're working with in terms of the potential of the size of the resource?
Well, it'd be hard to sort of predict the absolute size of the resource, and the reason being that we don't see any edges to it, and we have discovered other new gold zones which suggest that this repeats and extends quite extensively along the shear zone. What I would say is, based on what we see at Tunkillia, in the 223 deposit and in the new gold zones we have found around the 223 deposit, we're sort of very comfortable aiming for a resource of north of 2 million ounces here, and that will essentially underwrite that 150,000 ounce per annum production, especially when we're talking about then supplementing higher grade feed from the neighboring Tunkillia project.
Well, that would get some attention for sure. And then at your Tunkillia project, as you mentioned, you've got a new zone there. You've identified more than 12 structures. You believe ultimately you may be able to drill or at least produce from multiple open pit. So can you elaborate on Tarcoola?
Yeah, so the Tarcoola project is very interesting. That is actually the heart of South Australian gold in a way. In 1893, the South Australian gold rush commenced, based upon the discovery of outcropping gold on our mining lease at Tarcoola. So this happened at the same time as the West Australian gold rush. During the early 1900s, across our mining lease, about 77,000 ounces was produced by hand, the old-fashioned way. They're producing that gold at about 37.5 gram per ton, so over 1 ounce per ton. There has been no modern systematic evaluation of this ground to understand what is the broader system or set of shears in a system that is driving that mineralization, and what's the potential for that to grow. So we have brought in a lot of new technology. We've mapped the subsurface terrain, and there's a high grade open pit that we have right now. That's called the Perseverance open pit mine. If we imagine that pit here, it's a very shallow pit. It's only 500 meters long and about 70 meters deep. And feeding that pit is a shear called the Perseverance shear. Now we have mapped that shear down to the source mineralization. What is more interesting, as you've noted, is we've also identified a dozen or more parallel and cross-cutting structures across about a 14-kilometer long zone that have never been recognized. But where some of those structures come to surface, we have some very interesting historical drill results. In 1997, AngloGold drilled 16 meters at 3.4 gram per ton from surface on top of one of those structures. Now, they did not have the context. They did not understand that that structure was there, but we can now see that. So what we think is on the mining lease that we may have a cluster of these high-grade open pits, and then across that zone, we may essentially have a cluster of clusters. And that is very exciting to us because one, it's higher grade material, two, it's right on surface, and three, the location of the Tarcoola project means that Tarcoola can act as a high grade satellite to a large scale Tunkillia operation, but also, and importantly, it is closer to our existing mill. So we can start operations using high grade open pit material from Tarcoola through our existing mill. That is how these assets operated in 2017 and 2018. We can bring forward that cash flow, become a producer, become profitable, and then get into development of the second mill. So it's a much, much lower risk strategy. Essentially, Tarcoola represents for us both a stepping stone to our 150,000 ounce production ratio and an improvement of the development and head grade that will be fed into the mill at Tunkillia when that is built.
And then, Alexander, your Challenger mine, where you have a joint venture, that saw production of 1.2 million ounces between 2002 and 2018. Now, if you were to bring that back into production and restart it, what would be the criteria and the factors that would compel you to do that? And also, what would be the timeline on that?
Okay, so a couple of things. So we do have a joint venture around the area of the Challenger mine. The Challenger mine is actually 100% owned by Barton, so we own that 100%, and then we also own all of the infrastructure. So it is a very strong leverage point for us. Now, looking at the Challenger mine, that, as you mentioned, that asset did produce 1.2 million ounces of gold between 2002 and 2018. The structure in that mine, or there's three primary structures that were mined, have been mined to about 1,000 kilometers depth. They keep going as far as anyone knows. They've been mapped for another 800 meters of development strike. But when we think about our broader strategy, and the reason that we're really focused at Tarcoola and Tunkillia is we keep finding a lot of gold at surface, and it's obviously lower cost and lower risk to both explore, develop, and operate gold in an open pit setting than an underground setting. Now, that said, obviously the Challenger mine is a lot of essentially pre-installed infrastructure. We have access to this material, and there are a number of remnants as well in the shallower portions of the mine. There's also a high probability of repeating structures adjacent to the structures that have been mined, because that is the nature of this asset. And essentially, it's sort of a series of pencil-like structures that have been collapsed and dip at 30 degrees. So there's a lot of exploration potential. If we wanted to restart that mine, what we would be doing is getting down in that mine. We'd probably spend 6 to 12 months doing depth extensions, and sort of you have to develop drill cuddies and then develop the underground resource. But otherwise, restarting that asset itself is actually a pretty quick operation. We would simply bring in a new contractor who specializes in underground mining. you turn back on the mill. We'd probably spend 3 months recommissioning the mill just to make sure it's running properly, and then you're back into operations.
All right, very good. Now, as far as the shares, management and the board own about 31%, and you said you're at a stage now, an intermediate stage, where you'd like to attract more gold-focused, project-savvy, long-term investors. So why are those kinds of investors the ones you'd like to see to come on board?
Oh, yeah, really good question. One of the reasons for that is we're a little bit different than your conventional sort of explorer in a sense. We're actually an advanced asset manager that has a very strong platform. So your traditional explorer is looking to develop a 1 million ounce resource to justify building a mill and then see where you go from there. In our case, we already have a 1.1 million ounce resource. We already have a mill. We have 3 bases of infrastructure. We have a village. So we are actually our starting platform, if you will, is usually the end destination for most people. We're looking to create something much, much bigger, a large scale gold producer to be sure, but also a large infrastructure operator. We would then, following the development of the Tunkillia plant, we would own the only 2 gold mills in the region. So we become both a gold production hub, but also somebody who can utilize that infrastructure to generate returns for investors by toll milling for other regional explorers. So this is something where we move up into a sort of a value level and a development level that's quite different. It's not quite so speculative. And this is really now all about the quality of the project, the quality of the people, and the quality of the execution. So having these types of investors who recognize the difference between sort of speculative short-term news flow and long-term development and execution is really valuable for us, because I think we've got a very clear pathway to our destination. We know the steps we need to take. We're focused on risk mitigation, and we want the right types of investors coming along with us who we believe really benefit from exposure to that journey.
Right. You really seem to have a lot of unique factors in your favor. And Alexander, I just want to circle back to wrap things up here. Last question. When you talk about Tarcoola and potentially starting to produce from there and cash flowing from there, how near term would that production be?
Look, in a sense, we could do that whenever we like. And the reason for that is that we have an existing mining lease at Tarcoola and we have an existing open pit. So we have no pre-strip to start mining from that mine. We've actually found a new gold zone immediately behind the southern wall of that mine. So in some sense, we could start that right away. The only real consideration for us when we think about restarting that mine is we want to put it through our mill. So what we want to do is actually just to make sure that we've got a comfortable 2 or 3 years of material, if you will, 2 or 3 years of runway for us to be putting material through that mill, so that we can start them, recommission the mill, start it, and then run it in a nice normal cadence rather than stopping and starting and stopping and starting. So as we come into 2023, we've been doing a lot of geophysical work, a lot of technical work at Tarcoola, looking at identifying these repeats of structure. We're going to come back and we're going to drill test a number of these and hopefully quite quickly put together the thesis for actually restarting a Tarcoola operation and recommissioning and restarting our Central Gawler mill.
Okay, Alexander, well, thank you for helping us learn more about the Barton Gold story. We'll be following the news flow, and we'll see you next time. Thanks a lot.
Thank you very much.
Alexander Scanlon, he is the founder and CEO at Barton Gold.